Hey Future Millionaires, this is Phil from the Next Chapter team, and in this ETF review we're going to look at four ETFs from Charles Schwab. First time ever we're doing a Charles Schwab funds. We'll do a deep dive on each ETF, check out their performance, and then we'll wrap up the video with a quick look at how the balance would be if you invested in each fund consistently over a 5 and 10 year period. So sit back, relax, and enjoy this ETF review. Before we jump into the video, please take a moment to like, subscribe, and share. Enjoy this ETF review and catch you at the end. Now let's get started on this review of four Charles Schwab ETFs. To start the review, we're going to do a quick recap of what an ETF is. It is an exchange-traded fund, and how do you buy an ETF? So first up, before we do that, we're going to take a look at the funds that we're going to review today. Today, we have a Charles Schwab U.S. Broad Market Index Fund, a Charles Schwab Mid Cap ETF, a Charles Schwab Small Cap Index ETF, and then a Charles Schwab Fundamental Emerging Markets Large Company Index ETF. Starting off, what is an ETF? An ETF is basically a basket or a group of investment securities, usually stocks. But this could also be bonds or other investable securities. Even now, there has been approved ETFs of cryptocurrency. Next, share prices on ETFs change throughout the day. So your price at 9 o'clock is going to be completely different your price at 3 p.m. depending on market volatility. ETFs trade just like a stock. Unlike mutual funds, which they're set price for the day and they're readjusted based on activities within the mutual fund. ETFs tend to have lower expenses and fewer brokerage fees and brokerage commissions. Now, before you jump into buying an ETF, you need to determine how you're going to buy the ETFs. You need to determine the account that you're going to buy it in. So is it going to be an IRA or a brokerage account? And usually we list out an IRA or a brokerage account because unfortunately most companies don't have ETFs in their 401k. We'd love to find out if they do have companies that have ETFs in their 401k. I would love to do a review on that. So leave a message and leave me a list of ETFs that are in your 401k. I'll put together a video on it. Then you determine which investment company you're going to work with, which investment broker. So that could be Fidelity, Charles Schwab, Vanguard, etc. All the big ones, right? Even Webull. You decide on the brokerage firm, and then from there you decide on how frequently you are going to make your purchases. We always tell people, if you can, if your budget allows you, try to do it with the same frequency in which you get paid, kind of like a 401k. So if you get paid weekly, if you can, do investment weekly or bi-weekly. At the most, we would recommend doing monthly. Why? Because by going with these frequencies, you give the opportunity to do good dollar cost averaging. Again, but this is dependent on your budget factors that are driving you to allow you to do investing. And then from there to make it a big W for you, because that's what this is really about, to show the possibility of building up a big hefty investment account. Make that transfer automatic into your investment account, and then purchase as automatic as possible. So we like to tell people, do that investment automatically bi-weekly, and then do a day or two later automatic purchases of the ETFs that you want to purchase. In this review of ETFs, we are going to review the ETF category, the fund benchmark, the fund summary, expense recap, top holdings, and of course, performance. That performance information is going to help us at the very end do a review of what the balance will look like over a 5 and 10 year span. First up, we have the Charles Schwab Fundamental U.S. Broad Market Index. This one has an ETF category of large value. This one is trying to track against the Russell RAFI US Index. And in this one, you have an expense ratio of 0.25. So for every $10,000, you have an annual cost of $25. All right, with this big boy, you get 1,727 different securities in this fund. Top 10 holdings that make up roughly 18% of this fund include Apple, Microsoft, Berkshire Hathaway, JP Morgan Chase, Exxon, Meta Platforms, Amazon, Wells Fargo, Verizon, and Intel. Then when you look at this in terms of sectors, you've got a great variety. You have about 19% in financials, 15% in information technology, 11% in healthcare, 10% in industrials, and consumer discretionary is 10. Other sectors include communication services, consumer staples, energy, materials, utilities, and real estate. Now let's jump into the performance of this one. Whoa, okay. 1 year, 24.48. 3 year, 11.27. 5 year, 14.62. And 10 year, 11.68. This fund, if you were in it since the very inception, you would have seen a return of roughly 11.94. Next up, we have our mid-cap ETF. This is a Charles Schwab mid-cap ETF. Mid-cap blend. This one is trying to seek the total returns of the Dow Jones mid-cap total stock market index. So that's a subsector of the Dow Jones, just the mid-caps. And look at that expense ratio. Really low, concentrated, 0.04. So for every $10,000 you have invested, you would have had $4 annually on this fund. All right, now let's take a look. You would have had 496 different investments in this fund. Top companies that make up about 5% include Dell, Decker Outside, Vistar Corporation, PTC Inc., Steel Dynamics, Hubbell Incorporated, Western Digital Corporation, Axion Enterprise, and NetApp. Sectors for this one: industrials 21%, financials 14.16%, consumer discretionary 13.6%, information technology 12.8%. Other ones under 10% each: healthcare, materials, real estate, energy, consumer staples, communication services, and utilities. All that with 496 different companies within this ETF fund. Now let's jump into those financials performance. All right. Our 1 year was 22.6, 3 year 4.73, 5 year 9.73, 10 year 9.39, and since inception 10.93. Pretty good returns from this one. Jumping into our small cap, here's our small cap blend. This one is seeking to track against the Russell RFFITM small U.S. small cap index. So that's a subsector of the Russell 2000 focused on just the small cap index with an expense ratio of 0.25. For every $10,000 you would have invested in this one, you would have had $25 of expenses per year. This one is a true blue index. Look at this. 1,010 different investment securities in this fund. What companies are in there making up the top 10 that just barely 4% in total? Coinbase Global, Supermicron, Microcomputers, Abercrombie & Fitch Class A, EchoStar Corporation Class A, Royal Caribbean, Assured Guarantees Ltd, Digital Bridge Group, Warrior Met Cola, Kepler Corp, Owens and Minor. Now look at those sectors. Nice spread out. Again, because you're sampling from the Russell 2000 here. What do we have? Our industrials, 20.9. Financials, 18%. Consumer discretionary, 15.4. And after that, we drop below 10 for all of them. But a great spread here. You've got real estate, information technology, healthcare, materials, consumer staples, energy, communications, and utilities. Jumping into the performance for this one. All right, you had a 1 year of 18.9, a 3 year of 5.58, a 5 year of 10.5, a 10 year of 8.64, and since inception, so if you've been in this fund since the very beginning, you would have enjoyed returns of 9.59. Our last fund is a Charles Schwab Fundamental Emerging Market Large Corporation Index ETF. This one is fund category of diversified emerging markets, seeking to track against the Russell RFFIT Emerging Markets Large Cap Index. Expense ratio of 0.39. So for every $10,000 you have invested here, it would have been $39 annually for this fund. In this fund, we have 369 different equities. So that's different companies or at least classifications of shares. Top 10 holdings roughly make up about 25.58% of the total balance. So what are companies that we have in there? We have a Taiwan Semiconductors, a precious metals company, China Construction Bank, Class H. I've got to say, I've never seen a Class H shares. Tencent Holding, Alibaba Group Holding Ltd, Vale SA, Industrial Commercial Bank of China Ltd, Class H, and then the Bank of China Limited, Class H. All right, now let's take a look at those sectors. This makes a lot of sense. So first off, financials is about 25.4. We mentioned like 3 different financial sectors on the holdings, so that makes a lot of sense. Information technology makes up 18.7. Energy makes up 14.9, and then materials 11.9, and then from there everything's less than 10, but good spread. You have consumer discretionary, communication services, consumer staples, industrials, utilities, real estate, and healthcare. Now we're going to jump into the performance of this fund. Okay, this one's interesting. All right, our 1 year is 12.35. Our 3 year is 1.82. Our 5 year is 4.32. Our 10 year is 3.91. And our since inception is 3.99. And now we're going to take a quick look what it would look like if you invested an even amount consistently over a 5-year span and then a 10-year span in all 4 ETFs. All right, now it's time to take it to the spreadsheets. Let's have some fun. All right, we're going to use today's example that this person makes like roughly $50,000. So if they max out their IRA, whether it be Roth or traditional, so $7,000 the current max, it's roughly close to 15%, maybe a little lower than 15% with this example, but still, that saving target of investing about 15% for retirement over the course of many years can really build up to some big dollars. So again, as a reminder, we're doing all Charles Schwab funds, and let's take a look. So our first fund had a return of 1 year. This is our broad market fund, had a 1 year of 24%, but our 5 year is 14.37. Our 10 year is 11.14. Our mid cap was 1 year of 22.6, 5 year of 19.74, 10 year of 9.39. Again, that 10 years 9.39. Now let's take a look. What is that small cap? Small cap, 18% in the 18.91 in the 1 year, 5 year 10.5, 10 year 8.64. And our emerging market all over the place, but 1 year 12.35, 5 year 4.32, and then our 10 year is 3.91. Let's take a look at what the results would have been for 5 years. Switching over. Whoa. Okay, let's take a look. 5 years, you would have invested $7,000 every year. So 5 years, $35,000 in principal. And then your balance would have grown to $11,000 more. So $11,866 would have been about 25% of your balance. So you would have had growth of your balance would have had growth of about 25%, and the remaining 75% was all principal. Now let's take a look at what happens when you switch that to 10 years. So this is all about long-term investing, having that time horizon. All right, 10 years. Hey, there we go. Nice, we broke 100. Okay, so 10 years of $7,000 per year would have been $7,000 of principal, your IRA contributions, and then you would have had growth on that $70,000 of $43,000. So breaking it down real quick, your total balance would have been $113,000. Your principal would have been $70,000, and your growth would have been $43,000 on that $70,000. Now again, if you are able to do this even longer, the balance goes even higher. That's consistent investing over a long period of time can really build up to some major money. Now, of course, past performance does not guarantee future results, but this example is just to show you what things could have done and to inspire you to get on a budget or a spending plan, pay off some debts, and put yourself in a position to really save and invest consistently and enjoy some life in the mix and you could build up a great retirement and a great future. And if you don't want a retirement, you could do the same thing and put it in your investing balance. I could quickly move it over to an investing balance. But again, putting yourself in a position so you can save, invest, and enjoy life. All three. Save, invest, and enjoy life. Have an emergency fund to put yourself in a position so you can invest consistently. Have a good spending plan so you can enjoy some life as well as investing at the same time. And you could build up to some major money over a long period of time. And along the way, enjoy some life, handle some life, because life's going to happen. Hope you enjoyed the ETF review. So many more videos to come. We've got more Charles Schwab's. We've got more ETFs to come. We are trying to hit a lot of companies this year. So more reviews to come. Enjoy. Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please drop a comment. Please also like, subscribe, and share with your friends and family. This will help the channel reach out to more people just like you. We offer one-on-one coaching where we work with everyday people to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. If you're interested, please see our link below to schedule a free call with our team. That's right, it's a free 30-minute call with the team. Also, check out our affiliate links for high yield savings account. This is a great place for the saving up for those big purchases and your emergency fund. Thanks, and see you in the next video.